So this is the wrap up for Friday, the live market open on December 18th. It's the end of the Fed week, and the Bank of Japan tried to steal the show. So what did we have from the Bank of Japan? They surprised us with making a decision, actually, a change. They decided to introduce a new program that replaces an old program, but that's not what markets understood at first. We thought there's a lot of stimulus coming from the Bank of Japan. The yen weakened a lot, almost reached resistance at 123.60, but when the details became clear, a very small program was actually announced, and this might be a substitute for a bigger program, and that caused disappointment. Dollar yen, which already conquered 122.20, fell, which was the previous range, fell below this line, 121.74, supported 121.10. All in all, very exciting morning for the Japanese yen. It already sort of traded the whole previous range of 122.20 to 123.60 before falling to the the pre-Fed levels. Okay, details are still emerging, but in general, it's a very small stimulus program replacing an old program and serving as a substitute for something bigger, and that's of course less printed yens means a stronger Japanese yen. Okay. All in all, yesterday we had a stronger dollar, mostly against commodity currencies. Well, not against safe havens like the dollar and the yen and the euro. Then we had some dollar weakness, and now we have a renewed dollar strength across the board. In terms of figures, we had yesterday nothing that really shocked markets. The big shocker came from the Bank of Japan. Today we have the first post hike rate announcement from the Fed, from the New York Fed at 1 GMT. Let's see if everything went smoothly. Probably it did so at 1 GMT. The rate is expected to be between 0.25 and 0.50. Soon after the show, we have the Eurozone current account, not a huge market mover. For those of you trading the Canadian dollar, we have a big event. The Canadian inflation figures are expected to rise. That might support the Canadian dollar, which is still suffering alongside oil prices. Markets services PMI, not a big market mover, but today it's Friday. Low liquidity, triple witching, so every figure could have a stronger move. And last but not least, Fed member Jeffrey Lacker speaks at 6 GMT. Looking at the chart, we talked about dollar yen's crazy moves. Euro dollar supported at 108. Began falling this morning during the show. Resistance at 108.80, support 108, further support 108.60. 107.60 and 106.30. Resistance 109.50, 110, and 110.70. Pound dollar currently hugging the 149 level. Further support 148.50. Resistance 150, 150.15. And we talked about dollar yen, so dollar CAD, the sky's the limit. Any fall in oil prices means a big fall in CAD. Any recovery in oil prices means a small recovery for CAD. Canadian dollar is very, very vulnerable. It's important to note in this context that oil prices have not reached their previous lows, but the dollar CAD is already way beyond its previous highs. Okay, but anyway. Oil is depressed this week. We had inventories coming out more than expected. I don't know where's the bottom of the barrel. Perhaps at the post-crisis lows of 32.70, but who knows? And this has lots of impact. We talked about it before the Fed. Now the Fed took over. 71.50 on Aussie dollar, which is resistance. The pair is trying to recover. Yesterday, this risk-off sentiment pushed also the relatively resilient Aussie dollar lower. Further support at 70.65, resistance 72 and 72.80, which is an amazing separator of ranges. Kiwi dollar flirting, battling the 67 line, relatively resilient thanks to good milk prices this week. Higher milk prices, 67.90 is resistance. And support at 66. Okay, all in all, I think we're still seeing, bottom line, the Fed's rate hike is still pushing the dollar higher, but not all currency pairs are born equal. When we have positive atmosphere in markets, This is better for commodity currencies and also the pound, and not so good for the euro and the yen. And then we have a more worried atmosphere, falling oil prices, worries about stock markets, things like that. We have a stronger euro, stronger yen, but it's a bit now messy with the yen and the rate decision in Japan. Okay, so that's the wrap up for today. These are the main events. We might see lots of action because of low liquidity, triple witching, post-Fed repositioning, end of year repositioning. It's quite messy out there, so be very careful.